everyone, welcome to our video. Today, we're diving into a really interesting banking case study, Union Bank of India and its Casa dilemma. We'll be exploring how public and private bank in India performed, what affect Casa levels, and what Union Bank's Casa ratio is falling despite strong profits.
We will also look at some trends in credit deposit ratio, compare the Union Bank with the other bank, and finally, give our recommendation on how Union Bank can improve its CASA. Let's get started now.
So, first question is, how do the top public sector banks PSBS compare with private sector banks PBPS? Well, from this case, PSBS like State Bank of India, Bank of Baroda and Canada Bank are huge in the terms of branch networks and government support. They play big roles in priority sector lending and infrastructure.
Private sector banks such as HDFC, ICICI, Axis and Kota are generally more agile. They focus heavily on technology, customer service, and relationship banking. This is why PVBs usually outperform PSBs' profitability, efficiency, and digital adoptions.
Exactly, and if we compare key metrics, private banks tend to have high credit deposit ratios, often above 80%. They also maintain high CASA ratios, supported by strong digital apps and better client relationships. PSBS, meanwhile, are improving but still lag due to the legacy systems, large employee base, and slower transformations.
Next, what affect CASA levels in India? CASA stands for Current Account plus Savings Account Deposit, basically the low-cost funds of a bank. Several factors influence this.
First is the rising interest rate. After the pandemic, the RBI increased the rates, and the customers shift from the saving account to the fixed deposit and even the mutual fund, because this offered the highest return.
Second, alternative investment avenues. More people are investing in capital markets, systematic investments, plans, which is SIPS, and physical assets. These pull money out of savings accounts.
Competition from small finance bank SFBs. They offer super high saving rates up to 8%, meanwhile Union Banks only offers 4%. So naturally, customers move their money.
And don't forget digital factors. Banks with better apps, smoother onboarding, and faster service tend to attract more CASA. Union Bank's VYOM app actually ranks lower than private banks, so digital-savvy customers tend to churn.
Now, let's look at the trend. Across India, the credit deposit ratio hit a 10-year high of 80% in 2024, meaning banks are lending more aggressively, but deposit growth isn't catching up.
In public sector's bank, the cash deposit ratio are rising, but still mostly below 80%. The private banks, however, often exceed 80% because they are more aggressive in lending.
But what does this have to do with financial stability? A lower CASA means higher cost of funds because the bank relies more on expensive term deposits.
So, if CASA ratio drop while lending increase, the bank face liquidity pressure. It becomes harder to maintain margin, especially when interest rate is rise.
In simple words, CASA is like cheap food. The more CASA a bank has, the more stable and cost-efficient it becomes. Losing CASA can definitely threaten long-term financial stability.
Now, let's dive into the main case, Union Bank of India. Even though the bank posted its highest ever profit in final year 2024, its CASA ratio dropped to 33.58%, far below the national average of 40.5%.
When we compare the Union Bank with the others PSBS, like the SBI, Bank of Baroda, or even the PNB, Union's Bank CASA is noticeably lower. And the private bank, like the HDFC and the ICICI, is much stronger.
So, why is Union Bank seeing a decline? The case is highlights several factors. First, rising interest rates pushing customers to fixed deposit. Second, higher returns in stock markets and SIPs. Third, competition from SFBS offering higher savings interest. Fourth, weak digital performance (VYOM) app is behind competitors. 5. Negative growth in current account deposits. The last one is 6 is government's just-in-time funding policy which reduce the flood money in banks.
Also, Union Bank's cost of fund has increased to above 5%. Lower CASA means higher overall expenses and a lower net interest margin, which has dropped to 2.8%.
So, from a competitive perspective, Union Bank is improving in profits and operations, but its deposit franchise, especially CASA, in weakening compared to peers.
Alright, now coming to our final part. What action plans can Union Bank take to fix the CASA problem?
First, improve the digital experience. The Union Bank already started the BYOM revamp and digital journeys, but more upgrades are needed for the faster onboarding, the better app reliability, and the personalized offers.
Second, target high-value customers. Their New Lips initiative with dedicated relationship managers is a strong move. They should focus on corporates, SMEs, and affluent clients who can bring in large stable deposits.
Third, better retention strategies. Use data analysis to identify customers likely to withdraw funds and proactively engage them with offers, reminders, and incentives.
4. Launching competitive savings products. Even if they cannot match SFBS 8% rate, Union Bank can offer tiered interest, bundled benefits, or digital savings promotions.
Fifth, strengthen customer engagement through financial literacy program, cross-selling, and rewards for using the bank's digital channels.
And finally, the partnerships like their collaboration with IBM, they should continue to co-developing the digital solution to compete with the private banks.
So, that wraps up our discussion on Union Bank's CASA dilemma. It's a classic case of how digital competition, customer behavior, and market change can impact a bank's low-cost funding.
Union Bank is providing in many areas, but to reach its goal of becoming one of India's top 3 PSPs, strengthening CASA is absolutely critical.
Thanks for tuning in. Don't forget to like, comment, and subscribe. And let us know which bank or financial topic you want us to explore next.